asked you guys yesterday, okay, about why EU and GU were doing opposite things, right? Why was EU selling off here, okay, at this point in time when GU was busy going up, right? So why was GU doing that, and why was EU running lower? And that was because we were talking about the correlation with EG, right? If they're going to run liquidity on the crosses, they want to run some liquidity here on EG. That's one situation that's going to happen, okay? And we assess that, okay, EG has to go down. So EU in this case wants to go down and GU wants to go up. But then also talked about the divergence and the correlation, right? And that was also correct because if you look on the charts, all right, at a certain point of time, okay, from New York Open and London Open, those are our specific times that we're looking for our setups to occur, right? But there's also, the swing points that we can look at, okay, and then also when you're expecting market reversals, okay. So let's take a look at this real quickly, right? So this is these day dividers. You can see that these black lines here, dotted lines. So these are separate days. Okay, this was yesterday, okay, from here to here, okay, this was yesterday's moves, okay, and the sessions, London Open and New York Open times that we are looking for our setups, I've marked those out here, and then you can see this with the two purple dotted lines here, okay. So taking a look at this, when you are looking at correlation divergence, okay, number one you have to get straight is higher high, higher low, lower high, lower low, okay? Because there are two different things, right? I denoted them here with, if it's a higher high, it's HH. If it's a higher low, it's HL. Now, you're looking for this to be the opposite in, this is the dollar, right? So you want to look at, have it to be the opposite in EU and GU, okay? And you're going to use different terminology. Like you're going to see, if you see a higher high in DXY, you want to see a lower low in EU and GU, okay? And when you're comparing highs and lows, you want to compare high to high and low to low. So you don't want to say, if you're looking at like EU and GU together, you want to compare the lows or you want to compare the highs. You can't compare a high to a low or a low to a high, okay? That doesn't work. So make sure that you're using the correct terminology, and you want to make sure that you don't confuse higher low and lower high, because they're not the same thing, okay? Higher low and lower high are not the same thing. So it might sound the same in your head, and if you say it out loud to yourself, you might be thinking one thing and it'll actually be the other, right? So higher low means a low that is higher up than a previous low, right? And a higher high is a high, obviously, that's higher than a previous high. A lower low is a low that's lower than a previous low. And a lower high, okay, is a high that's lower than a previous high. So you have to make sure that you understand the terminology that you're using. Otherwise, it can get pretty confusing when we start to compare, okay, this is a higher high, this is a lower low, and doing the swing points, okay? So let's make this real clear, okay? So high to high, low to low. If I'm comparing DXY and I'm looking at the highs, okay, then I want to be looking at the lows for EU and GU. Okay, conversely, if I'm looking at the lows for DXY, then I want to be looking at the highs for EU and GU. All right, everyone follow me? Yes, yes. Okay. All right, now, if I'm looking at EU and GU, okay, these are supposed to be positively correlated, right? They should be moving the same. So if I'm comparing lows, I need to be comparing lows. And if I'm looking at the highs, I need to be comparing highs, all right? It's only opposite when I'm looking at the dollar because they're negatively correlated, all right? So in this example, okay, and I'm only gonna, let's just scrub over to London Open only, okay? All right, so here's London Open, and then here's what we did, okay? So the market started out up here, and then we dropped and made this low, Okay, so I need to connect two swing points, right? We just made this low in London Open. So this is going to be the point of interest, okay, in London Open. So I need to look, if it's a low here that I'm looking at for dollar, I need to draw it back to another low that was formed earlier. So we have this low back here, and then this low that we just formed in London Open, right? So this line here denotes a low to a higher low, right? You can see that the low is slightly higher, okay? So now, if I have a low to a higher low, if I have a higher low in DXY, what should I be looking for at London Open to correlate in EU and GU? What do I need to see? Okay, somebody said higher low. Somebody said higher high, higher high, higher high. Okay, if I see a higher low in DXY, this is where it's going to get a little confusing, okay? A higher high, you want to see when DXY makes a lower low. If DXY makes a higher low, okay, then you want to see EU and GU make a lower high, not a higher high, a lower high. Does everyone understand that? I'm glad that you said highs though, because that's the first part, all right? The first part is we were looking at lows for DXY, so you guys were, sharp enough to say, okay, we have to look at the highs on EU and GU, right? So that's good. You're looking at the highs, not the lows. So we're looking at a higher low on DXY, meaning we want to see a lower high on EU and GU, okay? So look at it this way. All right, I'm gonna draw this for you, okay? Lower highs like this, right? DXY makes a lower high. This low and this low. This low is higher, okay? On EU and GU, we want to see an inverse correlation, so we want to see this kind of move, a lower high, okay? So a high and then a lower high. If DXY gave us a lower low like this, okay, then I want to see inverse correlation on EU and GU to give us a higher high, which is the answer you guys gave, okay? This is when we want to see a higher high. So it's like a mirror, okay? You guys can understand that? Okay, so DXY made a higher low, I'm sorry. So what do we need to see on EU and GU? A lower high. All right? We're good on that, right? Please let me know if that doesn't make sense. Okay, now, so DXY higher low. So what do we want to see on EU and GU? We want to see what do we just say? A lower high, right? So let's go over to EU. London Open. London Open, we make a high here, okay? And we draw it back from a previous high that's made. So we have a high and then a lower high. So does that work? Is that normal symmetrical conditions? Yes, right? Okay, now let's look at GU. Here's London, oops. Here's the high, we draw it back, look what happened. So what do we have? We have a higher high in GU. So there's your correlation divergence. Which one of these is not like the other? GU, right? GU made a higher high. Okay, so under normal circumstances, we should see GU making a lower high, but we don't. Okay, in London Open, it spikes and makes a higher high. So what does that tell you about GU, and what does that tell you about the other two pairs? If under normal circumstances, we want to see when DXY makes a higher low, we want to see EU make a lower high, and we see that in EU, but we don't see that in GU. What that means is there's accumulation here, Okay, big money or big investors or hedge funds or big institutions are buying up GU, okay, more heavily than they are EU. Exactly, GU is setting up to go long, right? Because it's unable, price is unable to go lower, right? It's pushing, price is getting pushed up. There's a lot of buys being accumulated, and you can see what happens, right? Market rises as a result. Okay, now this is a 15-minute time frame. Okay, so I don't want you to expect these to be like daily biases. All right, this is only like a period of time between London and New York Open. Okay, because it's a 15-minute time frame. When you find correlation divergences on higher time frames like the daily, H4, like weekly, monthly, those are going to give you like some longer term, like big swing moves. But for a 15-minute chart, this is only really going to give you like a few hours window to run this, because you can see afterwards. Okay, so EU made a lower high, right? And then you can see it actually moved down in New York, right? But then it made this huge move up. Okay, so we're going to talk about why this happened as well. All right, so now let's go from London to New York. Okay, and we'll do the same thing. All right, so London to New York. Aro, you okay on that? Does that make sense to you now? Seeing it on the chart. Okay, so here is London to New York. Okay, now New York Open, we spike up here. Dollar spikes up, right? We made a low in London, so we had a stop hunt low, and we spiked up and made a new high here in New York Open. So we didn't see this move yet. But here's a high, which is a higher high on DXY. Okay? So if we have a higher high in DXY, what do we want to see on EU and GU? Okay, I see lower low, lower low, lower high, lower low, lower low. All right, most of you are saying lower low. Elia, why do you say lower high? DXY made a high. Okay, yes, we're not looking at this anymore. We're looking at this here. From this point to this point, DXY made a higher high. So this is no longer valid. I'm not looking at this anymore. I'm looking from here to here, high to higher high. So if DXY makes a higher high, what do I want to see happen in? Okay, there you go. So now I need to see a lower low in EU and GU, right? Okay, so here, London to New York, we have a low to a low here, lower low. Check. GU, we have a low here in London to a higher low. So again, we see the oddball out is GU. Okay. So when we under normal conditions, DXY makes a higher high, EU should make a lower low, GU should also make a lower low. It does not. So what happens is because GU is getting bought up, right? Accumulation in GU is being buys here that is unable to push price lower. So GU cannot make a lower low, right? So you can use this. So now using this as a fib range, right, from this low to this high that we made, look what happens. When price comes down into our equilibrium to buy zone area, sets up beautifully. There's your cow right there, Michael. Cow entry at New York Open, perfect timing, right? There's your setup long, 100 pips. Okay, so just by understanding what's going on in terms of correlation, right, and the divergence that's happening on the chart, you can catch a very nice setup if things align. Okay, so because GU was Wouldn't it be easier to compare the DXY versus, well, you're comparing, okay, well, you're comparing indexes then, right? But we're looking at just, we're looking at trading the currencies, right? So we have the dollar versus EU and the dollar versus the pound, right? It's the same thing, really, right? You can, yes, you can compare the indexes, but do you have the index charts on your MT4s? You don't, right? You have to go out to TradingView, you have to go out to like a, barchart.com, whatever, but it's virtually the same thing, right? I mean, you're going to get the similar kind of movement, okay, just looking at the majors, EU and GU, okay, rather than comparing the indexes. But yes, the concept is the same, Troy, okay? But you're looking at real-time charts and you're looking at candles that are happening. If you have the index charts open, then you have to go over into your, MT4 charts and then see if it's, compare the correlation there. It's just an extra step that you have to do. So it wouldn't be easier, actually. It'd be a little bit more difficult, in my opinion. Okay, so market goes higher, okay, right here, and there's your entry on GU, right? Now let's take a look at what happened with EU and DXY. So why did EU do this, right? Why did it do this here? The purpose of running down here was to what? Run this low. You got it. Okay, so once it did that, job finished, boom, reversal. Same thing here on DXY. We were looking for liquidity above these highs here, right? And we did that. This was previous week high, right? We cleared that, and then boom, we came right back down afterwards. Okay, so that it lines up together. Another thing that I forgot to tell you guys, when you're comparing the swing points, the lows, okay, make sure that the candle times are the same. Okay, meaning, see this candle here is on June 30th, and it's at server time is 1800. Okay, if I'm comparing that low and I'm moving to this low over here, July 1st, 11 o'clock candle. If I'm doing that, I need to do the same exact candles here on EU and for GU as well. Okay, I want the swing points to be the same. I want them to align correctly. Okay, it can't be like a couple hours before or a couple of hours after. You want to be comparing the exact same swing high, swing lows. That's how you get an accurate divergence reading. Okay, so don't try not to fudge it too much. I mean, obviously in a 15-minute chart, you can go like one or two candles to the left or right, and it'll be relatively the same swing low. But like you can't compare like this swing low. If you're using this one and you go out to like EU, you can't use the one that's like back here. You know what I'm saying? It has to be this one. Okay, because you have two other ones. So like maybe EU, there's this one, and you use this one. You can't use this one. You have to use this one, right? Whatever high correlates to this swing low here, that's the one you use. Okay. All right. So once we clear this, now I'm going to show you how the divergence here also works for EU. Okay. And now this is, you have to go out to a different time frame. So this works on all time frames. Okay. You can start to backtest this on your own, on your charts. All right. And look at other time frames as you scroll through this and look for these correlations and see how price moved in the past. Okay. So let's go out to a, all right. So I'm going to clear this. So everyone all right with this? We understand what we just, I'm at work and Miss Moffitt can make a lesson about this. Yeah, I will. There will be a lesson on this. All right. But doing this here, there's no recording today. So I'm sorry if you missed it, but yeah, try to keep up with whatever it is that you can, because I know it's difficult. Okay. So everyone clear on this, right? I can switch to a different chart. All right, so if you take let's go to I'm I'm going to use another chart so that you guys can see this. Okay, so let's look at H4, all right? And I'll do this one by one so you guys can, we'll do this together so you guys can see this one by one, okay? Is there another question here? No, okay. So let's look at DXY first, all right? Now, look at here, okay? Before this move down, right? We had this high to this high making a, what, higher high, okay? So this was the move that happened on EU up, right? From this point where it went down. So this is all in hindsight now, of course, but I'll show you how you could have caught that move while looking at the divergence, okay? So DXY makes a, what, higher high, okay? So what should we see on EU and GU? Good, lower low, okay? Let's go to GU first. All right, so let me mark this also. 1 second. So look, this is where the candles are going to be important. Okay, so here I use this high and this high. Okay, so I want to make sure I'm using the same candles as I compare it. Okay, so June 22nd, 3 o'clock, June 30th, 1500. And the lines will stay. Okay, good. They'll stay on the chart. So I want to see a lower low in GU. Do I get a lower low? I do, right? Let's look at EU now. What do I get in EU? Higher low. So what does that mean? EU is unable to run lower, right? EU is getting bought up. Subsequent move, 116 pips. Okay, and if you look at this candle right here, that was the stop hunt candle. Okay, right here, that cleared out this liquidity here. Okay, so if you're expecting price to reverse after clearing out liquidity, how do you know, right? I get this question sometimes. If it runs a stop, how do I know it's going to run the stop and go up and reverse? How do I know it's going to do that and not just run the stop and keep going? This is how you know. This is one way to confirm how you know. Okay, so if you're expecting a reversal, you can confirm it using this divergence. If you see it on the chart, it gives you an extra confirmation that, okay, price is going to run that low and then it's going to reverse and go up. Okay, it's pretty neat stuff, right? So this will help you find setups. Now, I'll tell you, it's going to work a lot better when you have ranging consolidations, okay? Because you're going to get this kind of divergence when the market is accumulating in both directions and trying to, accumulate orders to go for a big move. When it's trending huge, okay, then it's very obvious which direction the market's going to go, and this isn't going to help as much, okay? But when we're ranging like we are now, when you see this happen, okay, you're going to be able to catch some of these, right? And you just have to pay attention. And like I said, it can happen in all time frames, right? So you just have to pay attention to whatever one that you see it's happening on, and then just wait for the conditions to arise. So what are the conditions? You should be you should be expecting some kind of reversal condition, okay? And it should be after the market takes out some kind of liquidity, okay? So a stop run, some kind of old low or old high, okay? A previous week low or high, or some kind of area where it stop hunts and then makes a quick reversal. Right? When you see that and it makes a high or it makes a low and you get that divergence correlation to happen, okay, and you see it on, either EU or GU in relationship to DXY, okay, that'll help you find a good setup, and you can look for, and then you can be a little bit more confident in, the direction, right, in a buy setup or sell setup, and the stop hunt, you'll know if it's going to run really deep or if it's going to just, take out the liquidity and go up, right? So this is going to help you on not just EU and GU, because I mean, obviously that's the two pairs that I focus on, but it's also going to help you with Aussie dollar, New Zealand dollar, and also the other majors as well, UF, USD, JPY, those pairs as well. Okay, but you have to remember when you're looking at UJ, UC, UF, those pairs, you're going to be looking at the same uh, highs and the same lows, okay? Because EU and GU, those are anti-dollar pairs, but UJ, UC, UF, those are positively correlated. So you're going to be looking at the highs together and the lows together. You're not going to be looking at opposites, right? Okay, so that was today's lesson on the divergence. So everyone clear on that? Everyone understand what they're looking for now? If there's still questions, let me know. All right. Now I asked you guys the question yesterday in the chat, and I realized that, I only briefly touched on this, and obviously I didn't do anything in depth like this before. So I knew that wasn't really going to be expecting many answers from you guys about it. So I understand if you guys didn't answer the question, or if you didn't, understand how to answer it. But, this is, hopefully you guys have a better understanding of it now, and you understand what it is that you're looking for, and what happens when you see an odd man out, and how you can capitalize on a setup. Right. Yeah, you were the only one that attempted to answer it, so I commend you for being brave. Um, and this was mainly to help you, like you and everyone else that was having questions on it. But if you guys have any questions or think of any more, okay, let me know. But that's pretty much all I wanted to cover for you guys with today.